Hello there! The second part of Lecture Series 13 on IFRS 5, Non-Current Assets Held for Sale and Discontinued Operations will look further at measurement principles, changes to plan of sale and discontinued operations. It is possible events or circumstances may extend the period to complete the sale beyond 1 year. IFRS 5 stipulates in such a case, an entity may continue to classify the asset or disposal group as held for sale if the delay is caused by events or circumstances beyond the entity's control and the entity remains committed to its plan to sell the asset or disposal group. For an asset or disposal group to be classified as held for sale, it should meet the recognition criteria set out in IFRS 5. If the criteria are met after the reporting date, an entity shall not classify the asset or disposal group as held for sale in the financial statements when issued. However, if the criteria are met after the reporting date but prior to authorization of the financial statements, the relevant disclosure should be made. This is consistent to the principles of IAS 10, events after the reporting period. If the criteria of IFRS 5 is no longer met, the entity shall cease to classify the non-current asset or disposal group as held for sale. In such instances, the asset or disposal group shall be reclassified and measured at the lower of carrying amount prior to classification as held for sale, adjusted for any depreciation, amortization, or revaluation that would have been recognized had it not been classified as held for sale, and the recoverable amount at the date of subsequent decision not to sell. Next, let's look at discontinued operations. A discontinued operation is a component of an entity that either 1. Has been disposed of and represent a separate major line of business or geographical area of operation, or 2. Is classified as held for sale and is part of a single coordinated plan to dispose a separate major line of business or geographical area of operation, or 3. Is a subsidiary acquired exclusively with a view to resale. Non-current assets or a disposal group held for sale shall be presented under current assets separately from other assets. Likewise, liabilities of a disposal group shall also be presented under current liabilities separately from other liabilities. The assets and liabilities of a disposal group shall not be offset and presented as a single amount. The major class of assets and liabilities held for sale shall be separately disclosed either in the statement of financial position or in the notes. An entity shall disclose a single amount in the statement of comprehensive income comprising the total of 1. The post-tax profit or loss of discontinued operations, and 2. The post-tax gain or loss recognized on measurement to fair value less cost to sell or on disposal of assets or disposal group constituting the discontinued operation. Additionally, IFRS 5 also requires an analysis either in the statement of comprehensive income or in the notes of the single amount in 1 and 2 into, for 1, revenue, expenses, and pre-tax profit or loss of discontinued operations and the related income tax expense, and for 2, the gain or loss on measurement to fair value less cost to sell or on disposal of assets or disposal group constituting the discontinued operation and the related income tax expense. This concludes IFRS 5, Non-Current Assets Held for Sale and Discontinued Operations, focusing on definition of held for sale and discontinued operations, recognition criteria and measurement principles of IFRS 5, changes to plan of sale, and presentation and disclosure requirement of IFRS 5. The next bite-sized corporate reporting lecture series will look at IAS 8, accounting policies, changes in accounting estimates and errors. Till my next lecture series, thank you and have a nice day.